Welcome to the Winnie Podcast. This show is focused on empowering ranchers. Whether you're a seasoned rancher or just getting started, we'll guide you on how to use the infinite banking concept as an alternative way to finance your operations. It's a better way to think about money. Join us as we discuss planning for the future, attracting the next generation, and the art of keeping more money within the family. Here's your hosts, Winnie and Lacey.
All right. Welcome in. We are back to the book study and just in time to just dive into fall of 2025. And today we're covering off creating your own banking system through the dividend-paying life insurance, pages 21 to 25 is edition number 5. And so I'm here joined with co-host Lacey Rowan, and she's going to start us off. Perhaps you can start us off, Lacey, with the verse that Nelson starts with.
Dun, dun, dun. Yeah, so it feels like fall this morning. I know that much. And so kids are going back to school. And so it is time to get back to our book study. And I feel like most people, after a busy summer and a summer of some R&R, everybody's ready to just kind of get back into that groove and get some things done. So we're coming back to you with the book study on becoming your own banker. And we are starting at page 21 today. So this talks about creating your own banking system using dividend-paying life insurance. And so Nelson starts us off with Matthew 25, chapter 25, verse 27. You should have put money on deposit with the bankers so that when I returned, I would have received it back with interest. And so I find it interesting that even way back in the time that Jesus was walking on the earth, I think, around 30 years, he was around 30 years old when he died, that they were talking about putting money on deposit. And so it's not a topic that I feel like we can just throw to the wayside and not hold an utmost importance of. And so Nelson goes on to say, the business of a bank originally restricted to money changing and now devoted to taking money on deposit, subject to check or draft, loaning money and credit. And then this is what he bolded. And we're not going to read you chapter for chapter or paragraph per paragraph through this. But Nelson bolded this, and I thought this was interesting. And any other associated form of general dealing in money or credit. Okay, so the concrete banks, the banks that we all walk into and put our money on deposit and have a checking or savings account with. But he noted any other form of general dealing in money or credit. And so to me, what falls under that? The infinite banking concept and using a dividend-paying life insurance policy to deal money and credit with.
Well, and I think what often gets missed as well is just the fact that when you're dealing with a dividend-paying life insurance contract as well, it's free contracting between private people, right? And this has nothing to do with the corporate banks as well. And I think Nelson just had an incredible way of being able to think things through really clear. Like he just really loved to think and find a solution. And because he was such a devout Christian, he was just able to see things, I think, that in a way that most people would never really think about certain financial tools and implements to apply into your own personal life.
Yeah, I mean, and I never had the pleasure of meeting Nelson, but even just from watching some of his videos and reading his book and hearing you and Mary Jo talk so much about him and the conversations that you had with him and the time you spent with him, I can understand a little bit better when I read through his book because it's thought out every single detail of, and it's just amazing because, I mean, I wouldn't say like I'm thoughtful and I do think out details, but to the extent that Nelson did and laid it out in his book, probably not. It's so he gets right into it in the next paragraph. And this is something that I actually even have it plastered on my wall behind my desk. So I look at it every day. The very first principle in understanding the implementation of this concept is understanding that we finance everything that we buy. And some people, well, no, I paid cash for that, so I didn't finance that. But what he's trying to say is you either pay interest to someone else. So if we have a mortgage or a vehicle loan or a credit card or whatever, we're paying interest to someone else, or you give up the interest that you could have earned otherwise. And so this one for me is huge. Okay, maybe you're operating on cash in your life, in your business, whatever, and you don't see the need or the opportunity that can be taken advantage of when implementing IBC. But what those people aren't understanding is the lost opportunity cost. So can you speak to that, actually, Winnie, lost opportunity cost?
I think you were doing a fine job, Lacey, doing it. And so, yeah, opportunity cost. It's really like, again, coming back to what you just mentioned. If you think, oh, yeah, I pay for everything in cash, so therefore I owe no interest. So really breaking it down a little bit, it's like, well, actually, you may not be paying interest, but you're losing the opportunity to earn interest on those dollars you've just spent, because now you have to turn around and come back and re-earn those dollars all over again. So again, somewhere along the line, someone's earning interest. It's whether or not you own the debt in order to earn the interest or not. And so again, coming back to leading up to this point, up to page 21 of the book, again, if you don't understand what the problem is here, whatever we're talking about right now in this particular session is not going to really make much sense. So you might as well just go back and go to the very beginning of our book study in our podcast so that all of this comes together a little bit more in a way that you can appreciate when we talk about this. Because right now in our world, I think it's cyclical, but it feels like this a little bit more. We are in a moment where we are experiencing heavy inflation on a lot of things. I mean, every time you turn around, I don't know if it's just because, we like repeating each other. I'm not talking like me and Lacey repeating each other, but I'm talking about what the news is saying, what the radio is saying, what social media is saying. Everything just costs so much more. Food costs so much more. Housing costs so much more. The wonderment of how our future generations are going to actually be able to afford buying a home, right? And how that's actually shifting the way that we are living, how long our kids are staying with us. Now, for some of us, we want our kids to stay with us forever. But, the reality of them being able to move out on their own and be able to afford a home is becoming more and more of a distant reality, right? So what's going to be a really great hedge against inflation is when you really start looking at creating a system of policies. Sorry, I'm almost skipping ahead, but creating a system. Let's just start with this one. Sorry. Creating a system with dividend-paying whole life insurance contract really first, you really want to first start with, why do we want to do that? And Lacey's got into it really well with saying, okay, it's because you have to think about how many times are we buying something every day, every week, every month, every year. We are always spending money. So we're not talking about investing here, people. We're just talking about being better, being better and smarter with the everyday money that we have to deal with. How can we keep more of that? And so it really does come to understand the concept first of, hey, spend your money in a different way, run your money through a contract that has better terms and conditions than you just letting it come into your bank account, sit there waiting to be spent, right? Because the terms and conditions that are at the banking level are not going to be the same as what we're talking about here. We're talking about, it just happens to be an insurance contract with a lot of other really amazing benefits. But if you run your money through this policy, you are actually hedging against inflation because your cash value is designed, contractually guaranteed to grow no matter what, whether you like it to or not.
Yeah. And I think this brings to mind, and I bring up this example often because it's an incredible example of a couple who are our clients who started funneling money through their policies. And when we're speaking to, I operate on cash, or, I use my own money. And what are you giving up by not looking at this concept and, hey, how can this life insurance policy benefit me? So this particular couple, I work very closely with them and their accountant. I send their accountant any documentation that they need. This couple has built 6 figures in between the two of their policies, and it's their own money. It's their own money that they have put to work for them, and there's 6 figures there. And that's just in a few very short years.
Yeah, but you're talking about, so what we're talking about here is also what is, in order for a person to be successful with implementing the infinite banking concept and using the dividend-paying whole life insurance correctly, it does require, at the very beginning, being coachable, right? Like meeting regularly. And also the focus, just like this, like surrendering to the process of implementing this into their life, not trying to chase down 5 million different ways of how to create money. Like, this is foundational. This is before you actually, we're not saying that you can't go investing and do those things and grow your money. Of course you can. I mean, that's what this is here for. But we're talking about the very foundation that before you go ahead and start investing, be smart and run your money through a particular type of contract that's going to benefit you no matter what. So that even if whatever you're investing in doesn't go the right way, you've already put your money to work for you in cash, returned to you in the form of cash value, but also returned to you in the form of estate value for your loved ones at the end of life, right? So this chapter, this particular chapter, 21 to 20, not really chapters because he doesn't really have chapters, but pages 21 to 25, I want to come back here to using the problem that we are having around the housing reality of things. And if you read these 4-5 pages, I feel like you can really start to feel like it's a bit of a lighthouse. That there's hope, that there's a possibility of how you can help your future generations to afford that home, that next piece of land, that whatever, right? Because again, a part of what happens to be a dividend-paying contract, even though it can be used during your life, is that it does have that death benefit. And you ought to have that in place. I think many people undermine that. I actually just talked to a gentleman this weekend. His wife graduated prematurely in their early 50s, unfortunately. He got left with 2 girls, right? 21 and 25 in their university years, right? He works for the city of Edmonton. And it's one of those things where had his wife not left life insurance behind, he would have had to been selling his house, all that sort of stuff. But because there was life insurance behind, he kept naming off a few things over the course of the evening. But one of the things that really comes to mind for me is that he's able to have his daughters live at home rent free so that they can save, right? And, not have the debt also overcome with their schooling, but be able to save so that when they can leave the nest, they have something there, right? And he can feel comfortable with not taking rent. So there's so many good reasons. And so I guess the last thing I'll add to this piece is that when you participate in this, it's not like you have to feel like you have to part ways with 2 separate expenses, right? One for saving for life insurance, and the other one for saving for life and reusing for debt. It's one.
Yeah, it's one. And I think that can be something that is a little bit harder to understand at first, and harder to wrap your mind around. And I remember when we became clients, I just had to really sort it all out in my head and in our finances. Okay, it's not an added expense. Yeah, just reframe my mindset around it, really. And then I looked forward every month or every year to paying those premiums and what are those dollars going to do for us type of thing.
Yes. And I would have to say that if you were the first person in your family considering implementing the infinite banking concept, it's like being the first generation practitioner, right? Someone has to build, that lighthouse for the rest of the family first. And once it's there, it can be used to guide, every family in the future, through good times and bad times for future generations. And again, if you want the reality of your children and your grandchildren being able to own their homes, having that death benefit is going to help ensure that, so that, you don't have to keep the vicious circle of having to lend money from the bank as plan A for every big purchase that is wanted or required.
Yeah. And I think it's important too to note here, like, it's not about leaving our kids spoiled and rich or, with a huge amount of death benefit. Our hope is that we're teaching them along the way too. And just like in last week's episode where Nikki Flundra stated, like, her kids are listening. They're sponges whenever they're on meetings with us, and they know when they see us. And I think even one of them said, I know to you one year, I know you talk on Zoom meetings with my mom and dad. And so, like, they're soaking it up. And so our hope is that it doesn't end with you, but that we're teaching the kids in the family the same concept so that it keeps on living on through generation. Because when our kids receive our death benefit, they know what to do with it. They know how to steward it well because we've taught them. That is the hope here, that we are changing the course for generations to come here.
So, yeah, absolutely. But coming back around to, you finance everything you buy, right? In this particular set of pages, it's really worth reading all the way through, because the feeling that it leaves with you is that it's gonna, like, through good times and bad, you want to have a system like this in place so that you have a feeling of choice when you need it. Not that you have to make going to the bank the first thing that you do to save you from something that you want to do, like whether it's like taking on an opportunity that you really want because you see something that you really want to get, like a piece of land or a business that you want to invest in, whatever the case may be. But also, like, again, life is life. Things happen and it's not always going to be for the betterment. But if you have a system in place, you can surely weather those unexpected moments in a way that's going to allow you to feel a lot less stress.
Yeah, absolutely. So whenever you talk about weathering those moments, like, this leads right into, my earpiece keeps falling out, right into the next page where Nelson talks about being the owner. So being the owner of the bank. So when the bank owns our debt, say a mortgage or whatever it might be, who's in control? And we all know that. If you've been listening to our podcast for a while, or you know anything about infinite banking, you know that who the owner of the debt is who is in control. But he goes on to state, upon reading the contract, which is your policy, you will find it plainly stated that the owner outranks every potential borrower in access to the money that must be lent. Okay, so the owner. So who owns the contract? Yours truly. Yeah. Whoever, yeah. I own my own contract. And yes, that doesn't mean that you can't own a contract on someone else. We have policies on our kids and we own them. And so the owner outranks. So that means, like, you're in control. And I don't know one person on this in my life that doesn't like to be in somewhat of control. Like, we all have that aspect to us, right? Where we want to be in control of some aspect of our lives. But do we want to be in control of our finances? I certainly do, because I don't want to give that control up to someone else.
It's like the slave to the lender, right? If you got to be a slave to somebody, it ought to be to ourselves.
Yes.
Well, Yes. And I would also have to say in terms of talking about ownership, I think it might be really great to just point out some basics here. Like when you're looking at a contract of any kind, there's different positions in a contract. And so there's the owner, that's one position. Being the life insured is another position. So the life insured is the physical body that the life insurance company insures. And then if that life insured passes away, then that's when the death benefit pays out to the beneficiaries. So the beneficiaries is another position, right? Owner, life insured, and then the beneficiaries of the contract. And then there's the payer of the contract, right? The person who actually pays for the policy. And so those four different positions can actually be different people, oddly enough. Yeah. But like Lacey says, the one position that is the most coveted position, if you're going to enter into a contract, is the person who is the owner.
Yep. And I mean, there's so many details you can get into. Say you have kids, one parent can be the owner. And then a lot of times the question comes up, okay, what if that parent passes away, then what happens? Well, you can assign someone to be the owner of that policy upon your passing. And so, yeah, I just love how Nelson always comes back and he explains things in great detail. And sometimes it's a lot of detail that requires you to go back and read it more than one time for sure. And I feel like that is pages 21 to 25. Even if you have to take it one page at a time, that's okay in order for it to all sink in. And you're still going to need refreshing like that. And that's what we're here for, right?
So to what you're saying there, Lacey, the reason why you also want to dive into 21 to 25, especially if you are more of a details person, like if you're asking yourself like, oh, well, like, how do I know that this kind of contract isn't going to falter, right? So he discusses that in this chapter, just generally like how these policies are built and why they're built really smart and why they've lasted. Like this style of a contract here in Canada has been around for close to 180 years in Canada.
Yep.
Time tested.
Time tested. So I actually was thinking about that this morning when I was getting ready for the day. Something came to my mind and I thought, why wouldn't we put our money here? It has been time tested for, like you said, almost 180 years. These companies and these types of policies have performed and produced a dividend. Dividends are not guaranteed, but if 180 years of producing a dividend or a profit to these policies isn't enough proof, I'm not sure what is, because people throw their money into the market. We see market downturns all the time. We could wake up and have no money left in the market. But they question, like I'm getting a little fired up, and I'm like, but you question about putting your money into something that's had a return, like a dividend paid for 180 years almost? Like,
yeah. Well, it's here. Let's just add this in here. So many of Dave Ramsey's followers basically have been trained to say that, buy term and then just buy term and then go investing instead, because that's going to be a better return of your money. Right. So people who kind of learn about that sort of a thing, like, and think, well, life insurance is so expensive. So of course, whole life insurance is way out of question because that's, compared like to their vantage point, they find it expensive. But there are even a subgroup of people who think that they'll gripe around $50 or $100 a month to pay for crappy term insurance or just insurance that is only good for a short period of time, but they're happily going to pay $260 a month to finance something with the company. And the difference is like who is profiting. So they're happy to support the banks, but they're not willing to maintain and build up their own system of policies because they've qualified it in their mind as it's too expensive. So which kind of completely misses the point 100%.
Yeah. Yeah, it's interesting, the psychology of people, because this past weekend I was volunteering for some neighbors working in admission gate at a race that was put on close by. And people were complaining about having to pay admission into this event. and I didn't get any like real rude people. Where can you go anywhere these days for $20? And then it goes to say, you know, and we can tie this into paying a premium on a whole life policy. Okay, well, we have to take into consider the landowner let us be here. It's taken 3 weeks for the volunteers to set this course up. The volunteers have to be fed. And I don't even know what all goes into it because I'm not part of that racing world. I just help with this one event once a year. But it's like you're complaining about $20 to get through the gate for something that costs thousands upon thousands to put on. Go tell me where you can go for $20 for an entire day of entertainment.
You know what? This mentality reminds me of people who typically rent, because there are definitely some people who rent who have a very entitled mindset about them. And it's sort of like you have absolutely no idea the trade-off of you renting for X amount of dollars versus what that person who owns has had to put in. They had to come up with down payment, which is thousands upon thousands of dollars. They are 100% accountable to the bank for making a mortgage payment. They put all the risk up front. So many dollars, right? And yet none of that is taken into account. No appreciation is taken into account, but they complain, $20, right? Like similar to you, say all the effort is put up front and they complain about $20, but all they have to do is show up, pay $20 and enjoy.
And I did and then the one lady, I said, you know what? There was some sponsorship that was pulled. So yes, this event did used to be free admission, but one, I said, you can blame some sponsorship. And I said, but I know that you're going to get your $20 worth once you get in there. Because I've been around here for the past couple of weeks helping, and I know it's going to be worth your $20. And she carried on it. But it's just like, mentality. But then it goes back to one of Nelson's, what he always says, a luxury once enjoyed becomes a necessity, right?
Yes, our human condition. Yeah. And again, it can be sometimes a little bit hard to discern between, we talk a lot about policy structure and what it does. And then we talk about infinite banking. Again, infinite banking is the thinking that goes behind how you apply yourself and use this vehicle, right? It's like, I use this analogy quite often. I'll say it here again, but let's pretend you and I, Lacey, we have a 4Runner. We have a 4Runner, same year, and we're about to drive off the lot. It's a brand new 4Runner, and it has the same kilometers, same set of features, same everything, right? And essentially, it is the same vehicle. We'll come back in a year, and we'll see the condition of this vehicle. This is no different than what we're talking about here. It's our thinking, right? Because I can tell you that the condition of our vehicles in a year's time is going to be different from one another.
Absolutely.
Right? Because we have different environments, number one. I'm going to be more prone to rust because I live in the city and I'm going to be dealing with a bunch of salt. Lacey's got a bunch of dirt that she's always had to contend with, right?
Yeah.
And she's also got kids still. I don't have kids of the same age, right? So there's a fairly good chance like my vehicle will be a little bit cleaner than her vehicle, right? And
100%. 100%. Oh no. Your vehicle is 100% going to be cleaner than mine.
Oh, right.
Because
and then you can go
I live on the ranch. I live on the ranch. I have kids. And it's just, my vehicle's not as clean as Winnie's ever. But when you talk about that, okay, so something that you were saying a little bit earlier, and we talked about this before, and I want to make sure we address it on this episode, is a lot of people come to us and, gung-ho, ready to move forward, blaze a trail with the IBC. And that's all great and that's wonderful. But we have to keep in mind that the vehicle that we use is a life insurance policy. Okay, we all know that if you've listened to us for a while. But what does it take in order to get that life insurance policy? And that's sometimes where people get hung up. It can be a little bit of a friction point, because in order for you to submit an application for a policy, there's a lot of questions and there's a lot of information that we need to know about you. And so what comes to mind first for you, Winnie, on that?
Well, what comes to mind is just knowing that the trade-off to getting set up with your own infinite banking system, it's not the same as like when you go to the bank, you have to show all your financials and, prove that you're financially, that you don't need their money, right? So because of the nature of the life insurance contract, there's a different style of qualification that is required to get into it. And that means that you have to be able to share details of your health, right? And your overall lifestyle, right? And and I'm talking about like specifically for the person that needs to be insured.
Yes.
Right? And so you have to be willing to answer questions like, what is your height? What is your weight? When was the last time you saw the doctor? What's your medical history? And so, like sometimes I think that I have encountered where that's very personal to some people, right?
Yeah.
And in my earlier years when I, just was really learning and to share this and get people to the point where they really wanted to move forward with this. It's like, if I don't take the time to really prepare people to share what is expected in order to get into this contract, it can be real turnoff.
Yeah. And so some people, it's their medical and their lifestyle, that they are a little hesitant, or it's private, right? But then Nelson goes on to talk about how in order for an advisor to help you submit an application, we need to determine or calculate your human life value. And so that's going to require the next topic that is it's such a personal topic for people, and one that we don't talk about near enough, in my opinion, is calculating your human life value. But how much do you expect to earn per year? How much have you been earning per year? How much debt do you have? This all helps us calculate your human life value. And I think we as advisors and our team, we can get a little bit numb to numbers because it's what we do every single day. But that doesn't mean that we all don't have our own personal finances, right? And so when we sit down in a chair with an advisor or whoever it may be, then we're putting that same vulnerable situation where, yes, we're having to reveal our financial picture. And so I guess what point I'm trying to make is we do this every day, and we take it very serious, and we just try to help you to understand that we know that it's a personal, intimate subject, and we're here to help you through it. And there's probably nothing that will faze us, really. I mean, we've seen it all.
And we are also bound by confidentiality to the greatest degree, similar to going to a professional like an accountant or going to a professional like a lawyer and even a doctor. Our industry is heavily regulated. So just know that as a point of context. Also, really something that reminds me a lot is that, again, we talked about how much effort is put in to putting on an event, how much effort is put on to being, a person who has a revenue property and then renting to someone. The good news here is what is very inspiring about these 4 pages is that you do not have to put in the same level of cost to become your own source of financing, to become your own bank. You do not have to have you don't have to open up a chartered bank in order to do this and wait 20 years. There is something like this whole system. He reminds us again, like, you do not have to be wealthy or rich to get started with something like this. This is there's some powerful reminders about what he writes in these pages that ought to really empower any one of us to get started.
Yeah, because one, you don't know what you know until you know it. And I speak to that because when you buy the book and you start consuming that, you don't know what you don't know, and then acting on it when you know, acting on it while it's fresh in your mind is super important, because it's just all fresh in your mind, and you're going to have those questions pop up, and you're going to have ideas in your head of how it could work for you, and you're going to be able to run those by us. And so act on that information, because it's a benefit to you to do that while it's fresh in your mind.
Now, before we got going today, Lacey, you wanted to clarify something, because you wanted to say maybe we should add a little bit more clarity to a particular point. You said not too many people are familiar with the concept of getting better no matter what. Do you want to?
Oh, yeah. Yes. So Nelson, what paragraph was that again? He talks about.
That was on page 22 on the second side, halfway down.
Oh, right. So Nelson states, not too many people are familiar with the concept of getting better no matter what. So let's look at the airplane world for help. Okay, so he gives an example of an airplane, and then he goes in to talk about life insurance policies and talks about actuaries. And what I wanted to say, because I feel like it could be taken out of concept, is that no matter what, your policy will get better. And that's not exactly accurate, because if we are not being an honest banker, if we are not being involved in our policy, if we're not focused, if you're not coachable, your policy, it's not going to do for you what you want it to do. And so in order for it to get better no matter what, that requires your focus, your coachability, and being an honest banker. Just like treating your money, just like you treat the bank's money. If you know you have a bank loan due on the first of every month, you're probably going to pay that bank loan, because you know what's going to happen if you don't. They're going to come get whatever you have, your house, your car, or whatever it might be. And so it's being an honest banker if you want to see the results of your policy getting better.
Yeah, kind of like that, going back to that analogy of like us driving the same vehicle. If we don't get regular oil changes, if we don't refuel our tank with gas, you know what I mean? If we don't do the regular maintenance, it's not going to run properly. So yes, discipline must be used. And once you get the discipline of repaying those policy loans to yourself at market rates or higher, then over time, it's very possible to expand, right? Like, how is it that's exactly what franchises do? Why do banks do it? Why is there so many different banks of the same kind? Why is there so many franchises of the same kind? They do this and they expand because they have a system in place, and you're able to expand if you have the discipline.
That's right. So that was, I feel like, a really great start to getting back in the groove with fall around the corner. And so you know what to do. If you are new here, you can find our website at rancherway.com. That's where you're going to find the link to order the book. That's where your journey starts, is purchasing Farming Without the Bank, the Canadian edition. You can also find us on Apple, Spotify, YouTube, if you want to watch our videos, and iHeartRadio. Bang, took the words right out of Wendy's mouth. So have a great week. We will see you in the next episode.
So glad you leaned in with us on the WinA podcast. We truly hope you're feeling more informed and empowered to take another step towards optimizing your financial life. Right now, make sure you hit subscribe so you can keep growing and learning with us. Until next time, we wish you prosperity in every area of your life.